Good morning, it's Pete Najarian, and this is The Take on a Tuesday morning, and we're following up an absolutely extraordinary day when we go back to Monday. Now, in that overnight market, we started seeing the markets really start to accelerate to the upside. We opened up, call it close to 1,000 points, and then basically held on to that 1,000-point gain throughout the rest of the day. And we stayed in a fairly narrow range as we were hovering around there until the very end of the day. You look at the last 45 minutes of the day yesterday, and you see another accelerated move to the upside and adding another 400 points to what was already holding around 1,200 points. We finished up over 1,600 points, closer to 1,700 points yesterday on a big move out of the Dow, out of the S&P 500, out of the NASDAQ. And we're talking about moves that are 7 or more percent to the upside. And so that really was an incredible day to watch the performance. And today, seeing some similar moves to the upside once again. But before we get into today, let's look back at yesterday and see what was really working. Everything that had been absolutely crushed, but everything was actually working. But those that were really crushed yesterday, previously, were some of the biggest performers yesterday. So I'm talking about cruise lines. I'm talking about some of the leadership out of like a Boeing. Boeing was up 19% yesterday. We had the casinos that were moving to the upside as well. Hotels, Marriott, Wynn. Marriott was up 19%. Wynn was up 17%. Intel, and you look at the chips, really exploding to the upside. Nvidia, as well as Micron, as well as AMD, all up over 10% yesterday. Intel lagged a little bit, but it was still up 8%. So it gives you a good sense of just how strong, how broad this move really was to the upside. Now, to give you a little bit of an idea, we talk about algorithms to the downside. I'm going to point it out again to the upside as well. That final 45-minute move, I think part of what we were seeing yesterday was those that were shorting the market, they really were just flying in for some coverage there, some desperation covering of some of those shorts, because everybody's moving with these momentum moves up and down in the markets. And I think that was part of it. I think the algorithms were another big part of it, especially towards the latter part of the day after we'd already gapped to open up and then held in that range for most of the day. But that final 45 minutes or so of the marketplace, just an extraordinary move to the upside. You take a look at Microsoft. It went up another $4 in the final 45 minutes yesterday. It finished up about 7%. So up $30 in a couple of weeks. This is one of the names that has really hung in there, probably better than almost any other name that I can think of right now in terms of the larger cap stocks. Just absolutely incredible. And maybe it's all for the right reasons. That move to the upside certainly, I think, was based upon a lot of the right reasons. Now, were they in front of themselves? Yes, I think Microsoft was probably priced to perfection. Actually, maybe more than that when you looked at where it really was trading on a PE basis. But the push to the downside, not nearly what we'd seen in other parts of the marketplace that were really extraordinary. Now, we look at the volatility index yesterday, finished around 44, 45, somewhere in that range. The interesting aspect of what we're seeing today, however, is when we look at the volatility index, the market right now, as we speak, I'm giving you these fresh numbers, it's up a little over 600, call it 660 points right now. We've fallen back as far as being up only 300 points. We actually gap opened up again, 900 points, and we had the S&P was up over 90 points early on. That started to push back a little bit, and then we started to move to the downside. We moved down. We were up 500 points, 400 points, 300 plus points, and now here we are once again, just kind of stair-stepping back, taking back some of what that sell-off really was from those opening numbers. And it's been a wild first 90. Now it's almost 2 hours into the trading day. That's part of the reason I waited for the take today. I wanted to wait through to see exactly where we were so we could give you a really up-to-date look at things. So we are up 600 plus points. You know what else is up? The volatility index. We actually were trading just moments ago around a 46. So we were up on volatility with the market going up. Now, what does that tell you? It tells you there's still some nervousness out there. It is pricing in almost exactly the kind of moves that we should be pricing in. As a matter of fact, a 48 VIX right now would tell you about a 3% move per day every single day. Well, we're up about 3% on the Dow. We look at the S&P, we're up a little over 2.5%. So trading somewhere close to 46 really does make a lot of sense right now. So that's why I think you're seeing that volatility index up a little bit. And Is there some folks out there that are thinking, wow, this is a little too much too soon? I'm sure a lot of that really is coming into play. Now, what we were seeing a lot, I think, was the covering from some of these money managers, the algorithms that were pushing into this as well. But there has been that monitoring over these new cases and some of the progression that we're seeing, maybe a little bit of light. And that started yesterday. It's again here today. And I think that's part of the backdrop of this as well, because we did have such an incredibly oversold move to the downside. That really was an incredible move to the downside. John, yesterday, we had one of our roundtable webinars, and John, my brother, was talking about just some of the biggest moves of all time in the market, and then factoring in the VIX and how it was priced before and what that would mean now and some of those various numbers. We've got a couple of numbers that actually do reach into that category of, call it the top 5, top 6 of all time in terms of volatility itself, but also some of those shifts in volatility from lows to highs in a single day. And some of that, it's just amazing. And some of the slides John put up there really was something that I think a lot of folks really appreciated, because it gave everybody a sense of just how dramatic these moves and this move has been over the last, call it 4, 5, 6 weeks. Now, today, what's really performing again? Same kind of names. They look at the cruise ships once again. Look at the casinos. Win up another 11% today. I'm looking at these cruise lines, Royal, Norwegian, Carnival. They're up 19, 20, 25%. I mean, this has really been some crazy moves. If you take a look at the charts of something like a CCL or any of these cruise lines, you're going to see exactly what I'm talking about. Stocks that get pushed all the way into the 8s like Carnival was, and then back up towards 11, 12. Just amazing how fast these moves really are. And again, algorithmic trading has been a big part of this, and we've talked about it time and time again, and I'm bringing it up. I'm bringing it up for all those folks that say, hey, Pete, you only talk about it to the downside. That is not true. We see it in both directions. So the other area that I think really stood out for me is retail. Now, there are certain names in retail that have really hung in there. We were talking on the blog yesterday back and forth with a lot of the various folks, and Walmart, one of those names. Walmart has been really, really an impressive stock, and it's been a great trading stock as well. And we've seen option activity in there that produced literally overnight. So that's been something. But Kohl's, Capri, Nordstrom, all of these various names looking really, really pretty good today. You know, it's lagging slightly, just slightly, but lagging a little bit behind a lot of the big powerful moves to the upside, these 10%, 15%, 20% moves out of some of these individual names. But if you look at the technology sector right now, it definitely has lagged against many of the other sectors that you want to look at, whether that's financials or the various other indices themselves. It's definitely been lagging today, just for today. But we talk about these volumes all the time. I bring this up on a very regular basis, and I'm just going to give you a couple of numbers that I think really does stand out. Now, year to date, we're averaging a little over 28 million contracts per day in the derivatives world. On Friday and Monday, we actually started to see a little bit of pickup again after some of that dip that we were talking about in these volumes. I'll give you a great example. If you go back to the start of the April and the first couple of days of April, we were about 2 million short of where we are now, where we are trading about 25.8 million shares on average on Friday and Monday. So we were in the 23 million category. It doesn't sound big when you're looking at 23, 25. Percentage-wise, however, these are really significant numbers. And so we are seeing a little bit more volume coming back into the market. Today, we're seeing a little bit of volatility, actually at least hanging in there in the market as the market's moving to the upside and still up 600 plus points as we speak. The one area, and I'm talking about volatility, so I'm going to move right into the unusual option activity today. So we've talked about this before. I'm going to bring it up again. This one is the VXX, and I'm just using it more as a barometer. I do not trade a lot of these volatility indices myself. I use different derivatives off of that I think really represent what we're talking about when we talk about whether it's the VIX or the VXX or some of these. But I want to be very specific about this. The VXX, it's the short-term volatility index, and it's pretty interesting because it's trading right around 42.30 right now. And as we were seeing that, we're looking at the April 9th. Now, let's remember, April 9th is Thursday. That's really short term, and I've been emphasizing how short term we have been seeing a lot of the option activity. Last year I talked about it, but even in the last couple of days, we find ourselves in a much shorter term, even than we did maybe a couple of weeks ago, where at least we stretched out a little bit and we'd seen some Mays. Now we have seen some January options. I talked about the SLV. We've seen some all the way out to January. We've seen some Junes. We've seen some Octobers in various names. But a lot more of what we are seeing on the unusual category really is ultra short term. Well, in this short term VIX, we are seeing ultra short term. They're buying the 47 strike calls and buying in some pretty decent size. So that's something I think you just want to keep in the back of your head. What is that telling us? It's telling us that despite the fact that we were trading in the 60s not too long ago, and here we are now in the middle 40s in terms of volatility, where will the VIX be the rest of this week? Will we see a pickup? And that's somebody is betting on the idea that we likely will see some sort of a pickup in the volatility index, or this could even be a hedge. But it's just something you want to keep in the back of your mind. It's something really, really important. I think you want to bring up everything, whether it's the price of oil, this big surge that we've had in gold where we got up and through 1700. You look at silver itself back up on over 15. We talk about the SLV trading. We've had some miners when it comes to gold where we've seen some paper of late, including today, GFI, which is a stock that I will disclose. Yesterday we had activity there. I didn't use the options. I thought that the stock might even give a greater opportunity, so I actually own the stock there. But we are seeing a little bit of this paper, and we're trying to factor in all these different other pieces to try to put this thing together as best we can. Now, educate yourself. That's the most important part. Educate yourself about where your risks are right now in terms of a portfolio, and educate yourself, which is something we work on really hard here at Market Rebellion, of educating people in the derivatives market so they can make maybe some better choices or what better risk management choices they might be able to make, and some of the opportunities that are out there very short term like we're talking about today. We see a lot of this. Guys, this is The Take. This is the Market Rebellion. Join that round table every Monday. It's a great opportunity to hear from a lot of different voices, not just at Market Rebellion, but we always bring in special guests as well. Have a great day of trading.